The problem these days is that there are a lot of vehicles to dump risk on. James Hyerczyk, FX Empire. Several important releases come from the European area on Tuesday. What can we expect to see from the single currency this week?
I think the single currency is looking very good on the charts. I saw data over the weekend that said that the first net long positioning since May 2014 is taking place, and that traders are relieved now that the French elections are over, and now they're just looking forward to improving economic data. The first quarter numbers were good from Germany, and I expect that to spread over to the Eurozone numbers on Tuesday. I think Germany is leading the Eurozone out of this slow economic period, and we're starting to see the GDP grow at a strong pace. Inflation is a little bit of a concern, but that should begin to pick up. And I'm basically looking forward to more positive growth numbers in the future and a higher euro from where we're at right now.
Some key releases are scheduled for the UK economy this week. Heading towards the snap election, how are the markets preparing?
Well, I think the focus is on the snap elections, and they're going to have a limited reaction to the actual economic data. I think the market has been very receptive to the news about the snap election. The markets were quick to price in the announcement, and they see greater economic and policy stability under this event. And I think that going into the Brexit negotiations, the UK is going to put itself in a strong position to negotiate more favorable terms than if they did not have the election. And I think that British Prime Minister Theresa May is putting herself in a good position. It's kind of like a win-win to me, because she's either going to she's going to have everybody behind her in her with the general election, and she's going to have more backers from her own party behind her. And I think she'll be able to come out in a very good position leading into the general election. So I think this is very necessary. I think it's very positive for the UK economy.
With some big stories such as Comey's sacking, issues surrounding North Korea, and now the cyber attacks, how do you expect all this to affect markets in the US and worldwide?
Well, coming from the States, I tend to look at the VIX index, and it's extremely low. I think it hit a 24-year low last week. I tend to think that this indicates that there's an event that's going to take place that'll knock the stock markets down, but the market doesn't seem to be thinking that way. I think that part of the issue is that there are a lot of vehicles available today to dump the risk on. So if the stocks start to break, people start to buy yen, they start to buy gold, they start to buy treasuries instead of buying just, say, puts in the stock market. So although we do have risks in the market, I think traders have learned how to lay off the risk, and they're going to continue to support higher stock markets. And if they do run into trouble, they'll just run to safe haven assets like they did earlier in the year. Now, one other concern about Comey's firing is that it could possibly cause further division between the Democrats and Republicans. And if that causes problems with Trump's tax reform agenda, then I think you could start to see some investors peeling off and out of the market. Most of the markets that rallied from in November after Trump's election have pulled back to those breakout areas, with the exception of the stock indexes. So I'm assuming at some point we're going to see a correction in the market if we continue to see further delays in Trump's policies, his Trump administration agenda. And at the same time, we don't know what kind of response we're going to have to North Korea. Again, it's Trump's being secretive about that. And we also have a situation where the U.S. economy is starting to show signs of weakness. So Fed activity later on in the year is also becoming an uncertainty.
Thanks, Jim, for your expert views. I'm Jack Everett, and this was The Week Ahead. We'll be back on Friday with the weekly wrap. Until then, Goodbye.